Here's the problem. Employees are becoming increasingly dissatisfied with the retirement plan options offered by their employer. Yet 92% of employees surveyed value a retirement plan option as an important employee benefit. At the same time, employers are incurring increasing expenditures and litigation exposure by offering retirement plan options to their employees. So what's the answer? Retirement plan options that provide the benefits employees want while removing employer expenses and litigation exposure. Employers now have the option of offering two retirement income strategies that answer the most pressing concerns of their employees with no expense or litigation exposure to the employer. Strategy number one allows the employer to control which employees are offered these options and design multiple plans for different employee groups. Have no IRS approval required, no ERISA compliance or reporting required, no ERISA bond or fiduciary liability insurance required, no risk of employee litigation to either the business itself or the business owners, no administration fees, no management fees, no investment risk to either the business or the employee. If they choose, corporations can use tax-deductible corporate dollars to contribute to the plan. It can be used to pay select employees incentive bonuses to fund supplemental retirement income while achieving corporate goals and maintaining employee loyalty. It can also be used in place of expensive, qualified, and non-qualified plans that require ERISA compliance. Next, let's look at what employees are looking for in a retirement plan. In a Transamerica Center for Retirement survey, 71% admitted they needed more education on saving and investing for retirement. In a Bankers Life and Casualty survey, 71% of middle-income earners worry about outliving their money once they retire. Well, should this be a major employee concern? Back in 2000, T. Rowe Price released a recommended retirement strategy of withdrawing 4% of portfolio assets and taking a 3% inflation raise each year, with 55% of assets in stocks and 45% in bonds. Their original study back in 2000 concluded this strategy had an 89% chance of sustaining withdrawals over 30 years. After applying actual market performance from 2000 to 2010, they now conclude any retiree that followed this strategy would now have a 71% chance of running out of money in retirement, thus validating employees' concerns of outliving their money with the current retirement plan options provided by employers. In the Bankers Life and Casualty survey, 68% of employees have experienced a decline in the value of their retirement accounts in the past 3 years. 75% expect their retirement will involve work of some form, and 57% say they will have to work for financial reasons. And 60% cite pensions and guaranteed income as the most envied retirement benefits of previous generations. As an employer, you now have the option to offer two retirement strategies for your employees at no expense or litigation exposure to you. Strategy number one provides the employee with tax-deferred deposits, tax-deferred growth, tax-free income up to a specified amount, guaranteed account growth up to 8% for up to 20 years before retirement when choosing a guaranteed lifetime income option, protection of principal from market loss, locked-in gains every year the market is up, lifetime income guaranteed to never decrease, and all account balances inheritable upon death, unlike a traditional pension plan. Strategy number two provides the employee with tax-deferred growth linked to the market with zero risk of principal. Receive up to 15% account growth every year the market is up. Have yearly gains locked in and protected from loss. Receive tax-free income with zero possibility of triggering taxes on Social Security benefits. Have access to tax-free income at any age. Have no limit to the amount of funds that can be contributed each year. Have zero income tax on wealth transfer. And receive more income than from tax-deferred plans like an IRA or a Roth IRA or a Roth 401k. So as an employer, ask yourself this: does it make sense to educate my employees on retirement plan strategies that offer them their most desired benefits at zero cost and zero risk of litigation to me and my company.